Good evening, everyone. Welcome to Apple Markets webinar. My name is Chris. Nenad and I are going to take a look at learning how to set up invalidation and confirmation levels. Let's get started right now. Two warnings though. First, visit applemarketsglobal.com, select your country of residence, and contact the appropriate entity for more details about that, if it is suitable for you. Second is the risk disclaimer. Please be aware that trading for exchange and global financial markets is considered high risk. Please seek the advice of an independent financial advisor for more info on that and if it is suitable for you. This webinar is for informational and educational purposes only. By continuing watching this webinar, you agree with this disclaimer and you are aware of the risk involved when trading. All right, thanks so much for your attention on that. So, Nenad and myself, Chris, this is how we look like, and we're going to be talking about confirmation and invalidation levels. Finally, we had a bit of a slow start, as those that looked at the live session know, but we're finally going to get started. So why is that important? Well, for me, it is understanding when my analysis is correct. When is it kind of getting a confirmation that I am on the right side of the market? But it also gives me an idea when I might want to change my analysis and when my analysis could be wrong, or not wrong, but proven incorrect, and I would adjust my analysis with the new data. So I'm looking at the charts, I open the charts in the morning, take a sip of coffee, I do my analysis, and I understand the market structure after looking at the technical analysis, looking at fundamentals, upcoming events. So I make my plan based on that, right? So, but I'm not going to hang on to that forever. There are going to be moments where I want to adjust that. As new information seeps in and is available minute by minute, hour by hour, I want to, of course, not change my analysis every single minute, but I want to have points, let's say, checkpoints. Like a marathon runner passes a checkpoint so he or she knows that they're still on the right track to the end of the 40 kilometers, right? I have the same. I want to make sure that I'm still on the right path. And I don't want to get basically lost in the woods because I'm hoping to find a way out, right? Still want to know that I'm on the right path to get out of that forest. So if I don't do that, I will cling on and basically stay emotionally kind of attached in a way to my first analysis because I want the market to prove that first analysis correct, right? Maybe you recognize it. I don't know. Some of us definitely have that, us traders. So I want to remove that. I want to remove that bias and hope. That's why I have those levels. So it's like a wake-up call. It's like a bucket of ice with cold water in my face if the price goes to invalidation level, but at least I know the truth, right? The market is speaking to me. I want to listen to what it's saying. So if I have those levels, then I know what it's trying to tell me, what it's trying to signal to me. So then I have the chance to wake myself up, understand that whatever I thought was going to be happening isn't, and I can realign myself to what the market is telling me. So that's the advantage. Otherwise, there's a slippery slope really to the fact that we could just kind of really keep on hoping, just one last time, come on price, give me that confirmation, give me that bounce. Murphy's Law probably says it won't, right? And also, if we understand what key levels are, what the decision zones are, what we're looking for, then we're not trading in the middle of nowhere. Looking at the chart on the right, for instance, right, we might be avoiding some trades in the ugly middle part here of that zone, hopefully. So we could try to avoid it in more cases, right? We're never ever going to be perfect in that, obviously. So I talked about this, or we talked about this already several webinars ago, talked about the analysis. I use these three things, trend and impulse, support or resistance, and patterns, what I call the triangle of analysis. So basically, when I do this analysis, I have an outlook for the day, for the week, for the month, for the year, for the long term. When I have outlook, then I know if I'm interested in trading it. If I'm not, I don't need to go further. If I am, right, then I'm going to continue. And then we talked about decision zones not so long ago as well. So this is in a way a continuation of that. Once I have those decision zones, then I'm looking for a bounce or a break or perhaps both. That depends on the analysis I do. If I'm looking at the dollar yen uptrend, for instance, I was not looking for any bearish movement. So I would be only looking for bullish bounces or bullish breaks, depending what I see in front of me, right? But at every particular decision zone, there could be a bounce or break. Now the question is, do I want to trade them both or only one of those two? In fact, there could be both a bounce and a break available. There could be, for instance, when you look at this chart, right, we could see, for instance, right here, okay, there could be, or let me take a different example. Here, it could bounce to the downside, but it could break to the upside as well, right, obviously. So that's bounce or break. But then again, at the same time, there could be a support level here. So, which means that there could be a bearish bounce here and then a bearish break. For each particular tool or indicator used, there could be a bounce or break spot. So obviously we need to make sure that we're not overcrowding your chart, otherwise we could see too many of these bounce or break spots. You want to use the ones that work for you. You can look at the live webinars with Nenad or myself to take a look at the tools we use to establish bounce or break spots. Each of these bounce or break spots has an invalidation or confirmed level by itself. So, for instance, a bearish bounce here, because resistance is close and let's say the trend is down, which it was. So I'll be looking for a bounce in this zone, right, where I have the red circle. I would be looking for a bearish bounce. The confirmation could be engulfing twins. The invalidation would be a break above the red horizontal lines. If a price were to move, like the blue arrow indicates, above the red horizontal line, that would be the invalidation of the bearish bounce at the red circle. The confirmation would be bearish engulfing twins. Next example. How about the green line? All right, so am I interested in a bullish bounce at the green line where I have the green arrow? No, because it's a downtrend. Let's say I was not interested in that. But bearish break is different because it's in a downtrend, so that makes a lot of sense. So what is the confirmation of a bearish break? This candlestick, for instance, right? Or the next one. What is the invalidation of a bearish break of the green trend line? That could be, for instance, a break above this top, or if, for instance, price shows a higher low here, right? Or that could be a series of strong candles here, for instance, right? Or a break above a trend line that I don't have on this chart, but etc. That could be indication that there is a false break or not a break. A break with a big wick is not a good breakout. That could be a false breakout. That would be another invalidation of such a level. All right, so of such a break, I should say, of the bearish break. So those are two examples. Here, for instance, right? Look at these wicks here. As price breaks through this bottom, that would be an invalid breakout, for instance. Or look at the candles here above the red trend line. That could be a confirmed breakout to the upside, and this could be a confirmed bounce to the upside. So each and every decision zone would have a bounce or break potential. Each particular indicator could also have that in itself. And I'm looking, depending on the analysis, I would look for one, two, or both. And each of them has an invalidation or confirmation level that depends on the market structure and the indicator that is used. In cases of, for instance, a bounce in a downtrend, tops and bottoms are very logical to use as invalidations. And candlesticks are always good for confirmations. For instance, with fibs and waves, right? Basically, pretty simple. By the way, one question from Nathan. I indeed use MAs for trend. You can see this is 144 EMA close, and indicating the downtrend. And one of my favorite methods indeed is the MA using for the trend indeed. So for fibs and waves, in this case, both equally so. The dollar-yen invalidation, for instance, I was expecting a wave 1 and 2. So I had a fib on this particular swing high, swing low. So what is the invalidation level for the fib and for the wave? Both the same. This is 100 fib, the bottom of the wave 1, the origin of wave 1, the bottom, the swing low here, the start of that swing, the 100% fib there. If price would have broken through that level, then that would have invalidated my wave analysis. It didn't. Price bounced today to the upside as a wave 2-1-2 as I expected. And it's moving up at the moment. Now, will it confirm the wave 3 and break above this resistance? I don't know if it did that, right? I'm not sure how far it went in the meantime. Let me quickly check. But that's still open, right? It's at 114.30. So it's right at this red line probably. All right, so now it's again at the break or bounce spot at this red line. But the point is that it didn't get invalidated. If it would have pushed through 100, it would have been invalidated. And candlestick patterns, for instance, at the 78.6 fib can be seen as confirmations of a bounce at that fib. All right. Other example with fibs and waves. I was expecting an ABC zigzag as part of a wave 2 correction, 1-2 bearish, for downside after that. All right. So what would have been the invalidation level for the ABC, the purple ABC? Well, if price would have broken below this bottom, ABC is not expected. That's the invalidation level of waves in this case. What is the confirmation? A bounce at the 38 fib, a break above the resistance. Those are all confirmations. How about the wave 1-2? A break above the origin of wave 1 would have invalidated the wave 2. I turn at the fib levels here could confirm the wave 1-2. A break above the bottom would also confirm a wave 1-2. So those are just a couple of examples. Now, if you don't use fibs or waves, no problem, but these are just examples of that. You don't have to use, don't get me wrong, you don't have to use invalidation or confirmations only with fibs or waves. Once again, just to make sure that's clear, you can use this invalidation confirmation with any tool or indicator you want. It's up to you. Use the ones that you like. Set up invalidation confirmation levels with those tools. I use fibs and waves, so I'm providing you some examples with that. And indeed, today, of course, the ECB helped that, but the ABC, I was expecting ABC, and price is falling pretty quickly. So at this moment, I would think indeed that the wave 2 has been completed. Considering the strong momentum to the downside at this moment. The ABC is certainly completed, right, as expected, but there's also a very good chance that the wave 2 has been completed as well. I actually talked about invalidation and confirmation already. Sorry. So we can skip this page, this slide. So basically, analysis, decision zones, then I'm trading those bounds or breaks, and I'm setting up invalidation and confirmation. That's the flow, that's the sequence. Then, once that's clear, I am looking for triggers at decision zones where there's confluence preferably, and that's when I make those trades. So let's take a look at some live examples. I want to take a look at the dollar-yen. We could take a look at the euro-dollar. Any preference you have, perhaps. But remember, just one more time, analysis, decision zones, bouncer breaks, invalidation, and confirmation levels. So let's keep that in mind right now with these 4 steps in mind and take a look. First at the dollar-yen. All right, so alrighty, basically, dollar-yen. I expected on the weekly chart, maybe I will quickly or let me quickly remove this pivot point indicator. It's a bit crowded like that. And I'll take away these objects. All right. So I was expecting, I saw personally from a longer, higher time frame, an uptrend on the dollar yen. 5 years ago, I was expecting the yen to weaken after a lot of strength, and it had happened indeed with 5 waves. So what I was expecting was an ABC zigzag towards one of these fibs, basically. So my analysis told me that I was expecting a bullish bounce at one of these fibs. All right, so I was looking, the invalidation would be basically, well, that's almost too big to consider, but let's say that if price breaks through these fibs, then it's not invalidated, but then of course there would be some space to the next fib. The real invalidation is this bottom for the entire ABC zigzag, but that's, to me, not so relevant. It's such a big time frame. But the confirmation would be some turn at these fibs. So I was expecting a bounce at the 50 fib. At the daily chart, I saw lower lows, and eventually price broke above this resistance. So the potential bounce was here and here. Those were potential bullish bounces in my opinion. And it would have been interesting to take a bearish break, but only if price would have broken below these bottoms. Okay, so that was the bearish break potential, but then down to the 61.8 fib, and the 50 fib was otherwise a bullish bounce potential. That bullish bounce could lead to a bullish break if it breaks above this resistance. So that happened here, and the validation confirmation was the break of this trend line with the candles, strong candles. This hook back would have been invalidated if price would break below this bottom. That never happened. Price respected it and turned around. All right. So that's some of the thoughts, some of the invalidation confirmation levels that I had in mind. That I expected a strong push up. So I expected strong daily candles to rise to the occasion and keep pushing. So that was confirmed, and I'm expecting, if anything, light pullbacks and continuations. So as long as price does not retrace deeper than the 50 fib, the uptrend is, in my opinion, still confirmed. Anything below the 50 fib would invalidate what I expect as a strong momentum and a strong uptrend to a strong trend to the upside. All right, so the dollar yen bullishness, as soon as it hit the 50 fib half a year ago, each step of the way has been confirmed so far. All right, one point where it didn't get confirmed was this. I was also thinking this could be the start of a bullish rally. If it breaks above resistance, well, it did bounce at the 38.2 fib, but it didn't break above resistance, right? And in fact, invalidated the bounce by breaking through the bottom and falling down to the 50 fib. So that was an example of invalidation. So instead of hoping still for upside when price broke through this bottom, that was the invalidation level. That's when I knew that, all right, price is not going to make the bullish bounce and continuation from this 30. It was a bounce. It bounced at the 38.2 fib, but it didn't create a bigger reversal to the upside. So there was a first confirmation, let's say, of a bullish bounce, but not a second confirmation of a bullish break. And it actually was a bearish bounce out of resistance and then a bearish break here. That's the point where I said, okay, I got to change my focus and reanalyze this. And after doing that, or actually already before that, I realized that, okay, this could fall down to the 50 fib, which would be the next potential bouncing spot. All right, so yes, it bounced several times and then broke. And each step along the way, there is a different confirmation and invalidation point. If there will be, a question is if there will be a further retracement. And that's a good question. Let's take a look at this price action here. Let me add a fractal quickly. I think this is a pretty good candle at the moment, but the yen has been choppy. Well, definitely the invalidation level still remains these bottoms. I mean, a break below that, and I'm still bullish, but I would not be surprised if there's a slow grind of a correction back to 23.6 fib or to 38.2 fib. At this moment, this is a pretty strong candle. You know, if this is the best spot, it could be okay spot. Maybe better was a bit lower, but the news event was around the corner because it was close to the invalidation level. All right, so that meant that now the price is a bit in the middle. When it was a bit lower, it was closer to the invalidation level, so and more space to the resistance. So the R2R, reward to risk ratio, was better. So whether this is a good spot, I'm not sure, but the confirmation level I think would have to be a break above these tops. With a strong daily candle, perhaps a 4-hour candle, that would be, in my opinion, the signal for follow through to the upside. So that's confirmation in invalidation at the moment. Now it seems to be in the middle of nowhere, although the price action is bullish, but not the best spot, let's say. You know, could this go sideways still more? Yes, it could, in fact, especially if it stays between these levels, it could go sideways like that still. But I don't have a particular strong opinion on that, whether it goes sideways or not. I'm just keeping an eye on these levels, basically, for the moment. I can look at that time factor, perhaps. Let me take a look at the daily chart. 1, 2, 3, 4. This is the 5th day. So I can say from a time perspective that if tomorrow doesn't break this top at 114.85, then next week I would certainly be careful of upside, because then I think the correction might last longer, actually. If tomorrow does post a higher high with the daily candle, then I would be more bullish next week. That's time factor rule that I use applied on the daily chart. Euro dollar. All right. Basically, was retracing last month's bearish candle, for instance, right? So I was expecting a bit of a bounce at support. That was, for me, not so strange that price could bounce at support. If price broke through that level, then it would be a bearish breakout. I would gladly continue with that trend. So this is one of those cases that I was interested in both sides, both the bullish bounce and the bearish break, because I think both could be equally interesting. Yes, strong bearish candles here, and yes, strong downtrend on the weekly. So definitely interested in the breakout, but price was right at these key support levels. So I definitely saw potential for a bounce as well. So for me, this is one of those examples where I'm interested in both sides. Now, the bullish bounce, was it going to happen? If it was, it wouldn't go below these bottoms. That was the invalidation level of a bullish bounce, in my opinion. The confirmation level of a bullish bounce, basically, well, various ways, in fact. Bullish candles on the hourly 4-hour as price after the Italian referendum, for instance, right? The time factor or hook back here, right, could have been a potential. So there are different ways of confirming it. Fibs, candlesticks, those are ways I like to use. Once this strong price action occurred, this is already something I talked about, so I'll keep it short here. But once this price action occurred here, the strong momentum, I was expecting a correction and followed through as ABC zigzag up to resistance and a turnaround. So let's talk about quickly about that. So we talked about it already, but the invalidation was this bottom, and the confirmation, basically these fibs expected to turn at these fibs, and the confirmation of a turn, for instance, these price action signals, for instance. All right. Now that was also a news event, so maybe difficult to trade, but you get my point. Just to run through the confirmation and invalidation. So at this moment, is this a wave 3, for instance, right? Then if so, yes, the confirmation is a break below this bottom. Let's see, anything else? Gold, for instance. when I look at the weekly chart or quickly at the monthly chart, this looks like a pullback within this momentum. So I think still that this could be a bounce at the 50 fib. So there was a bounce at the 50 fib that has been confirmed. This could be an A or in wave 1. This could be a wave 2, and this could be a wave 3 or C, for instance. So the invalidation of that potential upside is if price breaks below this bottom. Then that's not valid anymore. Price, if this analysis is correct, could bounce at these fibs. So I'm looking for candlestick patterns at these fibs for a bullish bounce up to these targets and perhaps beyond. That depends if it's wave 3 or C. If it is wave C, price will only go to these targets right here. If it's a wave 3, it will extend beyond those targets to higher levels. So a break above this target, the 61.8 target, minus 61.8, invalidates a wave C and confirms a wave 3. Now I know I'm talking quite a lot about waves and fibs, so if that's not your preferred way of trading, no worries, Nenad is going to take over in a few minutes, very soon. But this is my way of looking at invalidation and confirmation in many cases, and a break above this resistance would confirm that breakout, bullish break. This would be a bullish bounce potential. This would be a bullish break potential up to these targets, and the break above these targets would show that there's potential continuation. So that's what I'm looking for at gold at the moment. So anything else? The pound USD, for instance, I was talking about a rising wedge throughout in the live webinar. So what was the confirmation? What was the invalidation of a rising wedge? The invalidation was a break through this trend line, this resistance. What was the confirmation of a rising wedge? The break through this support trend line. Then later on, I was saying it will probably finish a 5 wave here soon, or maybe 50 pips lower, which it was 50 pips lower or something like that. But then there should be a retracement of this downside, ABC's zigzag, towards a fib and then turn around again. What was the confirmation level of this ending here? Basically this part, bullish candles, bullish engulfing twins, 5, 6 candles not breaking this low or this low. What's the bounce? All right, what would have been the invalidation level of last one? I don't want to bore you too much here with my waves and fibs. What would have been the invalidation level then if I expected a bounce here and I expected a retracement for more downside because of this momentum? And there was also a head and shoulders here, potential. What would have been the confirmation? I was expecting a turn at these fibs, I said. I'm not sure which fibs I said. Probably these 3. All right, but it could have been any of these 4, to be honest. I think I said these 3. Candlestick patterns, for instance, right? Candlestick would have been the bounce confirmation here. This formation, maybe this wick, but on the early side, the first bearish candle, the close near the previous low, or the second one. All right, that was a confirmation of a bearish bounce. The invalidation, this top, couldn't break above this top, otherwise it would not have been the downside as expected. Now, is this the start of a downtrend or just a correction? That too depends on whether price can break below this support line. If price can break below that, that would confirm a stronger downtrend. All right, folks, my time is over here. On what time frame you go in? That all depends on that depends from case to case. But I look at 4-hour and hourly charts mostly, and sometimes a 15 and 5 for intraday setups. But this confirmation and validation stuff, from my point of view, you can use it on all time frames. It's just basically using a way to say, okay, here I think the market is confirming what I want to see. At this point, it's actually showing the opposite. That's basically all what it's about. So thanks, folks, for listening to my part. I'm going to hand it over now to Nenad Let's see if I can get him the screen over here. There we go.
Thanks. Here I am. So, okay. A lovely presentation as always. So Chris has passed his knowledge on to you guys and use it wisely. He is the master of Elliott wave analysis, definitely. Really, it's not just that we are colleagues and good friends, but he is really one of the best Elliott wave analysts over there, so you should always listen to what he says about it. I mean, I read a lot of different analysis on Elliott waves, but he does it very, very, very good. So guys, okay, I will talk about, first we will talk about breakout, okay? Then I will show you how to actually find your entry points, but assuming that you follow my analysis, okay, you know that there is a little bit of POC zones, which we definitely need to cover in a separate session on a price action trading school, and we will do that. But also I will show you how to take trades even if you don't know what a POC zone is. So one thing that you need to know that we will also do harmonic trading, guys. Harmonic price patterns are natural way to look also into markets. And Scott Carney, who is actually the founder of harmonic pattern trading, I read 2 of his books, and using my knowledge in price action, I can confirm that really Mr. Carney is also doing a great job on harmonic trading. He's been doing that for a very, very long time, and I found that some of his patterns are also coming in confluence with my price action Camarilla analysis. So that will be also covered in price action training school. And of course, as I said, from next year probably we will, I hope so, in January, so we will have live trading each Wednesday, right? So how do we actually find those confirmation zones or levels? By using breakouts. Okay, here trigger happy trade. That is the first possible entry with our breakout trades. Guys, don't forget that breakout trades are always the best if you use it with price action chart patterns such as triangles, wedges, and other chart patterns that we covered. I don't need to repeat them all, but I mostly use it for triangles, obviously, because triangles are a congestion part, right? Congestion part of chart. So if you translate a triangle into price action, you will usually notice that the price is congested here within this area, right? So what does it tell you? I mean, you just need to use your logic. You don't need to be a professional trader, or you don't need to have a vast experience. So if you just apply logic to this, you will know that this is congestion, guys. This is convergence, right? The price is converging into the triangle. So if we draw those imaginary lines that traders call by trend lines, so this tells us that the price is about to break, especially if it's close to the pinnacle or vortex of the triangle. So this pinnacle of the triangle is called the vortex. Okay, vortex is, well, literally in English it's like a hurricane. Okay, so vortex, a hurricane, something that you know, like a wind, the vortex. Okay, it can be also the part where we expect the final confirmation. Okay, the final confirmation. So vortex of the hurricane is always here, guys. Okay, here. And this is the main spot. Here, this is the main spot. So if you ever encounter the triangle and the price close to the pinnacle of vortex, okay, well, then you need to know that the price is going to explode somewhere. We don't know how many pips it will explode into, Maybe it will be 100 pips, maybe it will be 200 pips, or maybe it will be 10 pips, right? So if it's like 10 pips, okay, if it's like 10 pips, what you need to do is to just protect your trade, because you don't know how much the breakout will be valid for. But the good thing is we can actually determine at least the half size of that breakout point. I will show you how. So trigger happy is the first confirmation of the breakout. Usually, guys, when I do scalping trades, I like to do those trigger happy trades. So I treat those breakout trades as scalping trades, and I like to take them immediately as they happen. But don't forget, I said I treat it as a scalping trade. So the same is, guys, okay, the same is with every single vortex. Okay, the vortex of the hurricane, the vortex of the triangle, the vortex of the wedge, or eventually the vortex of some other pattern, such as, let's say, inverted head and shoulders. So you might ask, does this pattern have any vortex? Of course, guys, it has, but not in its traditional sense, but rather on the bottom of the right shoulder. I will show you that too. So breakout, this is trigger happy. We need to go with breakout retest. Okay, this is the one that I don't trade particularly much, because simply, well, maybe it doesn't fit into my trading style. I am not saying that this is not a good way to trade. I mean, some traders really prefer to trade with retest confirmations. There is a confirmation, guys, but I need to tell you that usually if I take this first breakout of the triangle, I rather am not trading any more triangle breakouts. So for me, this is the main move. This is a retest that can be good, but very often the price can get into congestion and break out in the second direction, in the opposite direction. So the thing is, this retest usually usually means that the price could drop, but if we don't see a continuation, you know, it's possible that it will be drawn back into the triangle, and then we might expect even breakout to the opposite side. So that is why I'm not that into retest trades. So from analysis point, guys, if you see that in analysis point, I use this as a confluence point. So I might use as a confluence point, but only if I have other tools for confirmation, such as Fibonacci, pivot point, a trend line, and so on. So it's good. But if I trade simply a retest, well, I don't do that very often. This is after trigger happy trades. This is what I like to use: breakout, pullback, continuation. Guys, this is standard inverted N pattern. Okay, just applied to the breakout part of the chart. So if you see this is flat top, flat bottom descending triangle. So if you see that the price has broken through, that there was a retest follow-up, and then if this point, breakout point, is exceeded by 2 pips, we can assume that continuation point is underway, and we might place one more trade. So what I do usually, if I see a trigger happy trade, I take the profit. Okay, let's say 10 pips of profit, for example. Then we see a retest. I don't do anything, and then we take a continuation trade, and I usually take it to the next pivot point or next important support. It usually can be like more 25 pips. So total overall, I can count a breakout for 35 pips. So this is, guys, that these are the things that you can use also yourself, but have in mind one more thing that is very important for breakout, pullback, continuation. You need to have the pair that has big ATR. Okay, average true range is of utmost importance. when you're trading breakout, pullback, continuation. So you need to have the pair that has a high ATR. Usually those are yen pairs like pound yen, euro yen also. You can go with, well, occasionally Australian dollar yen also. Well, now pound dollar is also good, but stay away from ranging pairs. For example, Australian dollar New Zealand is really ranging heavily, and you will see that by showing average true range in the last 14 days. So if you see that average true range is like 60, 70, 50 pips, don't go with breakout, pullback, continuation. The chance is that you will be trapped in a trade and that you will need to cut your profits short, or eventually you will need to close your trade in a small loss because it's a ranging market. So I don't really like to trade range markets with breakout, pullback, or BPC pattern, breakout, pullback, continuation. Rolando from Dubai is asking, Nenad, is this applied in all time frames? Yes. I mean, guys, every single time frame can have a trend, right? But you know, guys, 1 minute move. Okay, let's say that this is breakout on 1 minute. This is probably 5 pips, right? But if this is a breakout on 1 hour, it can be 25 pips. If this is a breakout on weekly chart, well, it can have 500 pips. I mean, guys, everything can be applied to any single time frame. It doesn't matter. I mean, it's very, very, very subjective. Some people trade 5 minutes, some people trade 1 hour. Well, you can actually trade whatever you see fit and take the pips even if it's a lower time frame, but don't expect that 5-minute breakout will give you always constant 30, 40, 50 pips. Only if momentum is that high, then you can actually hope that you will see a strong surge to the upside or to the downside. Other things to consider that we will cover now are ATR, chart patterns, daily highs and lows, price quadrants, and Camarilla H4, L4 points. Okay, so first of all, guys, yeah, thank you for your comments. Shazad, also thank you for your comments. For our euro-dollar trade today, yes, definitely this is the trade of the month. Euro-dollar rejection from 1.0850, and I think that well, it was really a great trade. The price moved so fast, it hit all our targets, and I hope that you enjoy 250 pip trade today on euro-dollar. For that, yeah, we will get back into that. Now this is the chart. And let's start first from, let's say you want to take trade on 15-minute time frame. 15-minute time frame, 30-minute time frame is good for breakout trades. So let's say, guys, that you want to take a breakout trade on pound dollar. Now, have in mind, guys, sometimes you will see triangles, sometimes you will see just retracement parts. In this example here, but guys, this is a fake out. So when you see a fake out, you can freely make the second trend line like this. You see, this is not a valid move. This was just a stop grabber that hadn't had any strength into that, so it was quickly reversed. So when you see this, okay, when you see this, and then price made another low here, you can really freely connect these 2-3 points like this. And this is not valid. This is fake out. So now this looks like, well, we can say this is a bearish pennant. But if you remember what I usually teach, well, a pennant is just it's just a form of a triangle, right, or sort of a triangle. It means that the price has made its move and now it's actually congesting, right? So if we take the height of the flagpole right here, this is the height of this flagpole, and drop it down here, we see that the move is 105 pip strong. Usually bearish pennant will tell you that you should wait for a breakout to the lower side because it's a bearish, okay? But the thing is, I don't take it as that. The first thing I watch is whether the breakout will take place. In what perspective? Okay. So if you actually take a trade up, if you take a trade here at this breakout, you know that this is a counter trend breakout because the price was bearish here, right? So this is the move in counter trend. So what you need to do is halve the size of this potential breakout. So if this is 105 pips, you need to count this as potentially 50 pip target. But wait, what if what if you have actually your pivot point here? So we will use hourly pivot, daily pivot points for this because 15 minutes is daily pivot points. Okay, and what now, guys? What will you do? You will take probably the half out, right? But there is more into that, not just that. You know that here at this point 38 pips is actually your first target. So what will you do? I would personally wait to see if there is enough momentum. So let's say that you took this trade, trigger happy trade. If you treat it as a scalp trade, then usually you will close it after 15 pips of profit. Well, I do it like that. I don't care really. If I treat it as a scalping trade, I will close it in profit for, let's say, after some 15 pip or 20 pip when I see that the price is losing momentum. But if you took a breakout pullback continuation trade, well, then you need to reconsider. Obviously, or let's say this is also, you see, this part here is retest. So breakout, retest. Continuation spot is here. Breakout, retest, continuation. You see, a continuation of a bullish move is like N pattern. 1, 2, 3. 1, 2, 3. See? Like N, letter N. 1, 2, 3. 1, 2, 3. And it goes up. So if you took a continuation trade, then 15 pips will not be enough because from this point and this point there was like, I don't know, there was like 5 pips, so you would have lost 5 pips. So this little bit of waiting for confirmation tells you that the price will probably make a stronger move. So my first target would be a pivot point, definitely. Total move is restricted to 58 pips. So you see, it's corresponding to this important resistance. It's actually 66 pips, but 58, 66, you see it's close. So once, let's say that we didn't take any profit, that we put the stop to break even, and we are riding a free ride. If we did that, we would have lost our trade here for 0 pips. So this is break even. But if you scaled out, and put, let's say, the rest to, I don't know, leave the stop loss running, not to break even, then you would have made bigger profits. That decision cannot be ultimately said because we don't trade like robots. You need to determine how market is moving. Obviously, this was some news, and because of that, the price went down. But what did I say? Usually after the news, the price corrects itself, and it goes in predetermined trend direction. So the trend was to the upside. This was just a spike because of the news, and here it went up. So what would I do? The first thing is, if you want to trade with breakout, pullback, continuation, your continuation is your confirmation point. Your total price target is half the way of this pole. Usually triangles, pennants are followed by some sort of price action. So from the top of the price action, move to the bottom. Count this and halve that if this is a counter trend move. If the price wants to go down, well, then we can take the full projection. But also, guys, I said in my slide, don't forget to include, this is very important, ATR. For that reason, we have ATR placed here. So if we place our ATR indicator, that I will do immediately, I hope that you all have this ATR that I'm using. If you don't have it, just email me. It's always placed on my charts. It's very important for my decisions. Okay, here guys, you see, it's for last 7 days. Okay, I will correct this to, yeah, 14 days. It needs to be 14 days. Here, 14 days. So 156 pips today, and projection was 132. So let's use today's example, guys. This is today's example. Do we have any pattern here? Yes, we do, guys. We have a rectangle here. So this is a rectangle here. This part, this is rectangle. So let's say that we took a breakout to the downside. Breakout, pullback, retest, continuation from this part here. The price went down, but watch this. It came to the bottom of ATR. So guys, when you have ATR, go with that. That is my warmest advice. Because usually the price will respect ATR. So if you took the trade from this spot, well, our projection told us that we could have probably, well, let's see the price here, the price there. Okay, here. Actually, this was the breakout point. Okay, and then into the rectangle. So the range of the rectangle, rectangle was 46 pips. If you add it to the breakout part, 46 pips comes here. See, 46 pips. It's very close to L4. But also see, guys, this was projection low. So projection low here, okay, let's use it. Okay, the top, the bottom, projection low was 42 pips from the breakout point. So I would definitely, if I left the trade running, I would have definitely taken my profit here. Now this was overshot. This part was overshot by today's ATR because we had ECB, and you see, but this was your point to take profits. So always use ATR. Today's analysis on euro dollar. Okay, I hope that you all took it really. It was very good here. It went as expected. You see, I said possible rejection here, guys. Now, if you trade it with the simple POC rejection, if you place your trade into this zone, you could have made directly 200 pips today. But if you had taken the trade when this retracement trend line broke, then you would already been in a profit. So I said, okay, here, watch for possible rejection, okay, and close below the retracement trend line should signal another move down. And it happened. Okay. So what was the point of this? Your trade could have been initiated here. Now, the price has rejected from POC zone, but you want to see another confirmation that the price will continue to go down. Drop into 15-minute time frame and watch this. This is a retracement trend line. Retracement trend line that was strongly rejected by this huge pin bar, shooting star, call it whatever you want, but this was bearish candle. Here, guys, after this candle, we just saw the price going down. So 4-hour time frame, the price hit POC, we take the trade. Okay, we missed POC, we didn't take the trade. We watch always for retracement trend line, guys. Okay, always for retracement trend line. Drop down to 15-minute time frame and watch what happened. Watch. Strong rejections towards our final targets. Okay, how did I determine my final target, guys? Very easy. I had a trend line here, okay, and I also saw an X cross of L4 and a trend line. So that is why I said, guys, here, this would have been your final target. X cross here, the trend line L3, this is the final target. And euro dollar respected it. So in order for you to use price action confirmation, wait for retracement trend line breaks. That's very important, guys. You need to wait for retracement trend line breaks. Retracement trend line will always show in a trend. So if you're watching the overall trend on 4 hour, it's bearish. This was retracement trend line, you see? Because this was not uptrend on 4 hour. This was a retracement on 4 hour. On 15 minute, this looked like uptrend. But on 4 hour, this was retracement. So here, when this retracement trend line has been broken, it was then that we actually took the trade, that we left the trade running. So the POC zone was H5, 1.0850. That was POC zone. Then retracement trend line broke to give you additional entry if you missed POC rejection. That was another confirmation that the price should proceed to the downside. Okay, so drop down to 15-minute time frame and see what's happening. See, very, very good setup. And finally, guys, price quadrants. Well, guys, for price quadrants, you need to open 1 hour time frame that corresponds to intraday price action. Now I'm talking from intraday perspective. Press Ctrl and Y, and you will get these lines. Between these lines is 24-hour of price action, so 24 1-hour candles. I always watch for previous quadrant and most important points. I always mark daily high. I always mark daily low, okay, for the previous quadrant. So this is today, right? And this is yesterday. I mean, this is previous quadrant, yesterday. So yesterday, daily high, daily low, and this is order block. Very important swing point. So I will mark this swing point and also these two swing points here. Okay, now what would I do, guys? If ATR tells me that this can be used as a breakout to the upside, I would probably take a breakout to the upside confirmed on 5-minute time frame. Okay, so let's say that we want to take this candle here, we drop down to 5-minute time frame and we trade the breakout. Okay, trigger happy trade, and you see continuation trade. But you need to watch for always for this. So this is how you do it. ADTR calculator, okay, press 14 on period, ATR period, press OK and you will see it. You see, guys, here it almost touched this ATR level and then it dropped down. So when it dropped down below this point, this was breakout, retest, continuation from this part here. But the problem is, guys, you see, on when pair will simply does not move more to the upside or downside, you might have restricted profits. So if you get taken the trade from here, well, not bad, total overall 50 pips. But I always, when I look at price quadrants, I always watch for ATR, always. And these are my profit levels. Okay, so the price has not cleared this level, okay, but it was very close. So 32, this was 20, so 10 pips. I might consider taking some profits here or full potential if I see it retracing. You can use other pairs, guys. For example, you can use Australian dollar yen. Okay, let's see. 1 hour. This is our, okay, we don't see a lot of trend. We need to see, oh, ATR is low. So we need to find better ATR. The ATR is also low, euro yen. It's good ATR. So see, guys, 140. Today, 231. 140 is good. So previous, oh, this was very clear, guys. This is high, this is low. Okay, price broke through yesterday low. You see, price broke through yesterday low here. Drop into 5-minute time frame, see what's happening. Breakout, retest, continuation. Well, simply all ATR levels have been cleared. You can use this principle also to trade breakouts. Don't forget that this is strictly used on 1 hour, 5-minute time frame. Okay, because 1 hour is used for important price levels such as previous swings of order blocks, daily high, daily low, and 5-minute is used for breakout, pullback, continuation, confirmation, or just trigger happy confirmation if you feel comfortable to trade with trigger happy. Quick questions, guys, then we need to finish this. I hope that this was clear. This webinar is recorded and it will be uploaded tomorrow. So, okay. Thomas is asking, I seek your advice about profit taking on example of breakouts. I like to have 2 targets and close half positioning first and run the rest. Yes, Thomas. If you do that, it's called scaling out. So if you use, let's say if you trade with 0.5 lots, you can close 0.25 and put the rest to break even. So you're riding a free ride, indeed. So you need to close it manually. If you are away from PC, I advise you to use your iPhone or Android, because it's very important to manage the trade, as price action is volatile and there is no set and forget trading as it was for like 10 years ago. So you need to manage your trade accordingly. Don't forget it. Shazad is asking, can you explain which chart you use, which Camarilla pivots? I use for my daily analysis, which you read each single day. I use always 1 hour charts or 4 hour time frame. If I see that the retracement is big, for example, like today on euro dollar, I would go with 4 hour. But usually I use 4 hour for trend, 1 hour for POC zones. But this concept about breakouts, you can use even on 15-minute time frame. If you use it on 15-minute time frame, then you need to use pivot points set on daily period. Don't forget it. Leon Show is asking me, can you show how to change ATR? Sure. First you go here to pivot, then click edit, and here you can change it. For 1 hour I use daily pivots, for 4 hours I use weekly pivots. But if I see that pivots have been overshot, it means that the price moved about H4 and L4, guys, then I need to move 1 pivot higher. So then for 1 hour I would use weekly. And yes, one more thing, guys, very important, I almost forgot it. You need to watch, for example, when I do my daily analysis, you need to watch for these levels, L4, H4. When let's say I want to go to okay, we will use daily for this. You see, daily has already been overshot. But what does it mean? If the price breaks through L4 and closes below L4, this is also important, then it means that it will proceed to L5. But how I look at it, if you follow my analysis, I always say watch for 4 hour close below L4 or 1 hour momentum. What does it mean? What does it mean? Sorry, 1 hour momentum, this is 1 hour momentum, guys. Strong candle that simply breaks through all levels. So this is 1 hour momentum. Then if you see 1 hour momentum candle, you can clearly trade it towards L5. And I also say if 4 hour candle closes below L4, it will reach L5. It's always like that, guys. It's very important for you to remember that because these levels are overshot. Again, okay, I will definitely use 1 time frame higher. Let me show you this, how I do it. So 1 hour, 1 time frame higher, okay, here. Okay, just let me clear this. Okay, 1 hour time frame higher. This is it. Okay, watch this. Indicators list. Okay, then you go to pivot. Then you click weekly instead of daily because H5 was overshot, you see? and OK here. So you see, guys, this is for our time frame. What would I tell you? If H4 candle closes above H4 dollar Swissy, the chance is that it will proceed towards H5. If H4 candle closes below L4, the chance is that it will proceed to L5. That is what you will also read in my analysis, so follow it very carefully. And the last question is how I chart these lines. Okay, guys, one more time. Open 1 hour time frame and press Control and Y. So Control Y on your keyboard, guys. Control and Y on your keyboard. So like this, okay? You see, it will print out for 24-hour price action within these quadrants. I call it quadrants. And that was it, guys. I don't see any further questions. I hope that you enjoyed. And well, we will go through this again. If you have any questions, don't hesitate to ask me. Tomorrow is a profit-taking day. I will do, of course, a new analysis, but well, have in mind that tomorrow is profit-taking, and that will probably have some counter-trend moves. Rolando is asking, can I request ATR indicator? Of course, Rolando, just send me an email to torrentialfx@gmail.com. Guys, try to use this principle, 1 hour, 5-minute quadrants. It will be useful to you. And watch camera up pivot points. Thank you for listening to me. I wish you a great night ahead or evening ahead, and trade safe. Cheers, everyone.